Morning, I'm Jason Decker, and I'm the General Sales Manager at Wright Toyota in Scottsdale, Arizona. The reason why I'm making this video is a lot of people have been asking me about the differences between paying cash, financing, and leasing a vehicle. Most of the questions have been really lease specific, so let me go over that with you guys. Alright, first and foremost, any way you buy a car is bad. The key is, how do I minimize my loss? So, just review purchase options. Number one is you can pay cash. Okay? It's really easy. It's MSRP plus tax, title, license. Get a check, credit union check, credit card, whatever you want to pay that amount of money on, and usually takes half hour, 45 minutes from to clean up the vehicle. You have your car, you're on your way, nice, easy, and simple. Secondly, is conventional financing. Okay, it's pretty easy. How it breaks down is basically all conventionally financed loans, there's no prepayment penalties. Okay, which means that you are only responsible for the interest that you use. So let's say, for example, you do a 72-month purchase, but you pay it off after 12 months. You're only responsible for 12 months of interest. Really easy. And number three is a lease. And the leases that we do here at Wright Toyota are backed by Toyota, the manufacturer. All right, one thing about the manufacturers being completely different than the banks when it comes to leasing is that you never see 0% or anything along those lines coming from Wells Fargo, Chase, any type of bank like that. Well, the reason why is because when Toyota does a lease, Toyota makes money two ways. Number one is when they wholesale a car to the dealership, and then number two is when they lend money in terms of financing and make money on interest rate. So, long story short is Toyota and any other manufacturers prefer leasing because they sell that many more cars. And here's how a lease works. It's pretty simple. I'll just make numbers really easy. Let's say the value of the vehicle is worth roughly $20,000. Okay? With a lease, they have what's called a guaranteed future value or a residual. And these residuals are set by a group of people called actuaries. Okay? They are really smart people, get in a room, and they figure out what the value of the vehicle is going to be if you drive between 12 and 15,000 miles a year under normal conditions, meaning you don't wrap it around a telephone pole or submerge it in the lake. Okay? So just to keep numbers easy, let's say the residual on the car is 50%. So 50% of $20,000 is nice and easy at $10,000. Okay? That's what you're obligated on. And there's really four benefits to leasing. Number one is any time in the lease, you can trade it. Okay? What's nice with Toyota vehicles is they really maintain their value well. And one of the big things with that is that, let's just say, again, the value of the vehicle at the end of the lease is $10,000. Okay? It's a Camry, Corolla, Tacoma, something along those lines, which they maintain their value well. Let's say, and I don't have a crystal ball, but the value of the car is worth $11,000. Okay? $11,000 minus $10,000 is $1,000. Okay? You can use that $1,000 any way you want. You want to use that as your down payment on your next lease? No problem. You want me to cut a check for you for that amount? Feel free. But that's the number one advantage to leasing a car. Number two is at any time you can buy it out. Okay? What's really nice about this is, and a lot of younger people take advantage of this. You're just out of college. You have your first job. Let's say you're making $36,000 to $40,000 a year, okay? And you can only afford a certain payment. What's nice with the lease option is you have definitely a smaller payment than you would on a conventional purchase, because when you do a lease, you're obligated on the difference between the value of the car and the residual, so only $10,000. With that lower payment, at any time of release, you can switch it to a conventionally financed loan. And let's say you want to buy it out at any time. Take advantage of the first 12 months, maybe 2 years worth of that lower payment, and essentially what you can do is refinance, and what's nice with Toyota is they give you brand new car rates, which means that at any time during a lease, whether it's year 2, year 3, year 4, year 5, depending on how low you want your payment to go in the term of your lease, you can, again, refinance that at a nice low rate, because if you take a look at any of the credit unions or banks out there, the older the car, the higher the rate. The reason why is because everything's based on risk. If you run into people who have bad credit, they're paying 18 to 20%. If you see people with good credit, 2, 3, 0%. But the whole key is that when it comes to the vehicle and why they charge so much more rate for an older car is because the older it is, the more likely it is it's going to break down, so they charge a higher rate. That's what's different with Toyota. At any time during the lease, you want to switch it to a purchase, no problem. You get those brand new car rates, and you're on your way. Also, you can sell it. Okay? So, again, using our example of $10,000 of the value of the car, in Arizona, what's nice is, from a taxation standpoint, when you register the car, a lot of times you don't have to pay tax. Okay? So, without that, let's say you're able to sell it for $12,000. Okay, $12,000 minus $10,000 is $2,000. And here's the nice part, is when you're advertising that car on Craigslist or wherever you're advertising it at, you can advertise with financing available. What do I mean by that? Well, it's real simple. You can take your customer, bring them into Right Toyota, we can just create a loan, set it up through Toyota, pay off your lease vehicle, and then also set up a loan for that other person. And here's the best part. You get a check from Right Toyota. So you can take that to the bank, no problems asked. As opposed to having to get a check from the person from Craigslist you just met 5 minutes ago and you're hoping and praying that it's not a rubber check and you're stuck with it. Plus, that person's going to want a title. And if they don't have the title, 9 times out of 10, they're not going to take delivery of the car, which would mean that you would have to pay off that lease first before you get the title. This way you eliminate both. We do the DMV work for you. You're on your merry way. You got a check for $2,000. You can use that to buy another car or whatever you want. Last but not least, option 4 is drop it off. Okay? And there's really only one instance you'd want to do this. And that's if the vehicle is worth less than the $10,000. And you're only going to run into that situation under one circumstance. And that's if the vehicle's in an accident. Okay? Because while it's worth $10,000, the problem is when you get that car fixed to like new condition, which is what the insurance companies are going to do if they decide not to total it out, what they do is they report that vehicle to Carfax. And I tell you, Carfax has done a phenomenal job as far as making sure that they've branded themselves that anytime you buy a used car, ask for the Carfax. We all know it, we've heard it, we see it every single day. But what's different about it is anytime that you trade that vehicle in, it's going to be reported to Carfax that that vehicle's been in an accident. And I don't care if it got bumped in a parking lot by another car, as long as you had that insurance company fix that vehicle, it's going to report that there was damage done. And if somebody sees there's damage, even if it's a single door dent, they're going to think the vehicle was in a major accident with frame damage and just a complete disaster. Okay, so let's just say, for example, a vehicle that's been in an accident, we all know is worth less if it's got a bad Carfax. So let's say it's worth $6,000 at that point. The problem is, if you do a conventionally financed loan, you now have to account for this $4,000 on that loan. And the problem is the only way that me, as a sales consultant, can help you out with this is if I trade in that vehicle. Because let's not kid ourselves. If you've ever had a vehicle and it's been in an accident, they never drive the same. So if you want to trade that vehicle into us, we have to absorb all that negative equity, which is what this is. So any discount I could give you on a car goes away. But here's what's nice about the lease option. If you drop it off on the lease, the car's fixed to like new conditions. What happens is Toyota sends out one of their assessors who come to our dealership, and they do a full walk around in the car. They've got the original MSRP. They take a look at all the options and make sure that every option on that car is actually on that car. If you've got the floor mats, you've got the cargo net, whatever it had, as long as it's on that car, along with the 2 keys, it's going to check out. Here's what they never do. They never check to see if it's been in an accident through Carfax. So that vehicle then goes to the auction, it's completely out of your hair. So you don't need to worry about paying that $4,000 because, again, it goes to the auction, they don't come back to you for that amount, and you're on your merry way leasing a new vehicle. So those are the 4 benefits to leasing a car. Here at Wright Toyota, we're the largest leasing dealership in the Southwest. We do between 110 to 140 to 150 leases a month. It's something we know better than anybody in the state of Arizona. So if you're interested in learning more about it, learn from the best, learn from professionals, learn from people that can provide you with all the information you need to make the right decision for you and your family. Please call us at 480-778-2200 or email to jdecker, and that's D as in dog, E-C-K-E-R, @wrighttoyota.com. Hope all is well, and we hope to hear from you soon.